So, how are you all doing? How was your weekend? I hope you found an opportunity in Nifty 50 today. Raviji, I saw your screenshot. I'm happy that you're making beautiful profits and learning new lessons every day. Chiragji, I just saw your screenshot. You took multiple entries and made profits. That's really awesome. That is a beautiful growth. Very good, Raviji and Chiragji. Snehaji, initially master taking one entry. Once you master taking one entry per day, then only you can focus on re-entry. Vanashriji is saying no voice. Can you all please confirm? Clear voice. Vanashriji, please check internet connection on your end. I think all are saying voice is clear and loud. So let's try to plot the setup so that it will be a good practice for you. Which simple moving average are we using? Very good. 10 simple moving average. So 10 simple moving average. Parabolics are default setting. Okay. MACD default setting. RSI. What are the overbought and oversold zones? Very good. 60, 40. So overbought and oversold, right? Is this clear? So let's try to apply Fibonacci. So we need to apply Fibonacci for the previous day price action, right? So to get Fibonacci 11th, on which day should I plot Fibonacci? Previous day, right? This is the highest point and this is the lowest point. Yes or no? Correct. So do we have open equal to high in Nifty 50 today? Do we have open equal to high? When there is open equal to high, so what is the sentiment? Be it a stock, be it an index? Bearish, right? So whenever we have open equal to high, then big players have decided that they want to take market down, bearish, negative, right? Don't you think the first candle itself breached the PDL, previous day low? This is the lowest point, so obviously this is PDL. Yes? Can you all please confirm? Yes or no? The first candle itself breached the PDL. So what did I tell you? For any index or stock to become bearish, the minimum criteria, it has to break PDL. So after breaking PDL, this was the first candle. This is the reference candle. It closed below 10 SMA. So I'll mark low. 9:30 candle breached the low of the first candle. Yes or no? So according to 10 SMA, bearish trend has been initiated. And don't you parabolics are above 9:30 candle to confirm that it's a bearish trend? Yes. So two indicators confirmed trend is bearish. Now, don't you think you have a negative crossover along with histogram shifting downward exactly for 9:30 candle? Yes, right. Yeah, so three important indicators, which are trend confirming indicators, they suggested from 9:30 onwards, trend has become bearish. Along with that, PDL has been broken by 9:15 candle only. Once PDL, which was acting as a support, once it's broken, don't you think it will act as a powerful resistance? Yes, right. So it will not allow candles to go further up. Okay. So, but for 9:30 candle, RSI shading is not visible. So for 9:30 candle, RSI shading is not that prominent or visible. So whenever you don't see proper RSI shading, then you have to wait for the next candle. Yes or no? Yes, right. So you need to wait for the next candle. So this candle has got RSI shading, that is red shading of RSI is visible. Yes or no? Everything beautifully matched. PDL is breached. PDL is breached. Priyanka Raiji, why you saying no? Don't you have RSI shading for 9:45 candle? Ramesh ji, you don't have to wait for candle to close. I never mentioned anywhere for you to wait for the candle closure. Whenever candle is opening, if you see RSI shading, you are supposed to trade. Priyanka ji, how can it be between 40 and 60? Can everybody please confirm that? Do you guys see it is below 40? Ravi ji, for that you need to back test. So I'll tell you, you need to back test. You need to do paper trading for 1 month. You need to develop conviction and fear. It's below 40, right? Priyanka ji, how can you say for 9:45 candle RSI is between 60 and 40? Can you please tell me? Because these are the settings that you can manage, right? Can you please confirm, Priyanka ji, or else I cannot go ahead? Because we have less time to learn more. Because everybody are saying for 9:45 candle, they can see red shading because it is below 40. Can you please check your settings? Do you have the settings, please, Priyanka ji? Are you checking Nifty Bank or Nifty 50? Karthikeyan ji, you got 20 points here. I'm very happy. Priyanka ji, are you checking Nifty Bank or Nifty 50? Nifty Bank, right? Am I discussing Nifty Bank, madam, or Nifty 50? Because indicator will work perfectly across the world, irrespective of the location. When I'm discussing Nifty 50, if you check Nifty Bank, obviously there was no trade today because RSI was between 60 and 40. Can I go ahead, madam? Please check Nifty 50 RSI for 9:45. Is it below 40? For Nifty 50, please check and confirm. Is it below 40, ma'am, for 9:45? Yes. So is your doubt clear now? It's not the setting issue. You're looking at a different chart altogether. So 9:45. Samji, for 9:30, it is not below 40. I need red shading for to trade. You should not be in a hurry to lose all the money we have in DMAT. So if you have any doubt, uh, then you need to wait for, yes, Venkatji, at 9:30 RSI is 44. It is not below 40. The red shading will appear only when RSI goes below 40. Samji, please cross check your thing. RSI is not below 40. Even if it is just piercing the 40 zone, because I have mentioned this more than 5 times when I discussed RSI. When RSI is just piercing 40 zone, you're not supposed to trade. You need to wait for the next candle so that let it sustain below 40 and give you red shading. Then only you should trade. Then only you will have accuracy. Didn't I mention that, guys? Whenever RSI is just piercing, whenever there is a doubt, whenever you don't see the red shading, will you go for a trade, Srikanji? Because everybody is saying yes. Until and unless if you see the red shading or green shading, you're not supposed to trade. That's what I've mentioned in the class. If it is very close to 40, if it is just touching 40, there is no shading at all. It may look it's 40, but red shading should be there. Please revisit all the, Srikanji, please revisit the videos, okay, to get the points. So I hope 9:45 entry is perfect according to the setup. Yes or no? Shall we go ahead? Can you all please confirm? Then later what happened? It took support from this point and then it tried to retrace. Is there any candle closing about NSMA here? Sam, answer to the point. Is there any candle closing about NSMA here? So there is no opportunity for buy trade. Don't you think PDL, because these are the information that you need to learn whenever I'm saying, because this comes with experience. You will not get this information anywhere. So PDL, don't you think PDL is acting as a powerful resistance? Along with PDL, you have 10 SMA also. So you have two resistance together. So definitely it will not allow candle to go up. And moreover, you can see parabolic SR is beautifully aligned on top, which says the trend is still bearish. So then there is no point of discussion of candle closure above or below. You just have to wait for RSI to give you red shading. So didn't you get RSI red shading for 11:45 candle once again? Because you don't need confirmation of other three indicators. All three indicators are still telling you it's bearish. There was a rejection and it started to fall once again. So at 11:45, you got one more entry. Okay. So what is the difference between high to low in this candle? So 930, 882. So almost 48 points. Even if you take this, almost you have got around 68 to 70 points movement from in these three candles. So approximately 64 points. So getting 10 points should not be an issue. Yes or no? So you got 10 points beautifully here and you got 10 more points here. You got two entries according to the setup. And later what happened? This is the last support of Fibonacci. Yes or no? So candle started to stand or take support on the last support of Fibonacci, right? And then you can see candles are trying to make lower low, but RSI peaks are trying to make higher lows. Yes or no? When candles are trying to make lower low, RSI peaks are making higher low. Don't you think it's a beautiful bullish divergence that we have discussed earlier? Yes, right. So though we did not get entry, at least you did not stay back in trade in put option, because you got to know there is a bearish bullish divergence. It might reverse, right? So RSI gave you entry only on the last candle of the day. By then day was almost ending, so we don't take any risk at all. Is that clear? First of all, open equal to high. The sentiment has to be bearish, and PDL was broken. And for 930 candle, RSI did not support. There was no clear red shading. At 9:45, you got a clear shading. All indicators beautifully merged to give you a clear signal so that you could have taken one beautiful trade. And later there was a retracement, but PDL did not allow it to go further up. Later, we were waiting for RSI confirmation because all of the indicators were same. When you got RSI indication once again, you took one more entry. That's all. I would suggest you guys to stick to one trade per day concept, at least for 100 days, because you need to get used to the setup. It's a new setup and it will take time for you to get used to it. Once you get used to it, then definitely you will make very good profits. Tarun Sharma ji, you should have followed the trailing stop loss concept, which I've explained yesterday. If I repeat the same, I cannot discuss new topics. Please revisit previous video and then you will get an idea. So let's check Nifty Bank and then we'll go to the new concept. So Niravji, as I've requested you earlier, in the live market, you're not supposed to check option chain. You will draw support and resistance, whatever mentioned on the previous day. You are using the previous day levels. Okay. But whenever my setup is trying to give you entry, it will try to break those levels. But very close to these levels, you're not supposed to take any entry at all. Okay. If you missed 9:45 entry, 11:45 entry was beautiful. You must have traded that. Okay. 15 minutes candle will help you to achieve patience level. Was there any sell opportunity in Bank Nifty since Friday? This is 17th data. This is today's data. Do you see any red shading on RSI? So don't you think today RSI was between 60 and 40? Priyanka ji, I'm coming to your example. So no trading day. Many people who traded Bank Nifty would have lost today. Yes or no? You should be very clear. Whenever setup is matching, you should have traded Nifty 50 today, not Bank Nifty, right? So let me plot Fibonacci also for the previous day price action. This is the lowest point and this is the highest point. Don't you think candles were between PDH and PDL? What did I tell you earlier? When RSI is between 60 and 40, when candles are between PDH and PDL, we are not supposed to trade because there is no strength. Market can move any way, any which way, so you may incur loss. Yes or no? There are two confirmations saying neither the PDH or PDL is broken. So RSI is between 60 and 40, hence you're not trading Bank Nifty today. So in Nifty 50, beautifully, it breached PDL. That's why we got the confirmation from our setup. Yes or no? Yes, yes. Just because Priyanka ji wanted to see the shading of RSI, I just pulled it up. Ramesh ji, you have to follow it up because see from 9:30 onwards, MACD is bearish until this point. RSI, there is a bullish divergence, okay, and there is a positive crossover with histogram above zero. Rahul Singh ji, please revisit the divergence concept. If I keep repeating the same thing, we cannot learn something new. When candles are making lower low, RSI peaks are making higher lows. That is bullish divergence. It will reverse the direction. So you can see here candles are making lower low, RSI peaks are making higher lows. Hence there was a gap up. Will you revisit the videos on divergence, Rahul? In bearish divergence, we'll connect lower low and higher lows. In bullish divergence, we connect lower low, only lows. When it comes to bearish divergence, we'll take highs. So I've given the notes also, and I've explained with a lot of example. One entire session was spent on it. Yes or no, guys? Can you all please confirm? Because I need such kind of confirmation quickly so that you can, because see, bull call spread and bear put spread is not part of my syllabus. Okay, there's no compulsion for me to cover. Just for your good, I'm trying to do it. So I can wind up my session today only, but I cannot do that. Srikanji, when RSI is between 60 and 40, it has to be choppy. You cannot say it is sideways when RSI is above 60 and below 40. So can I go ahead? So let's check currency. So same setup has to be used for currency segment. Yes, please take down the list number 3. Please take down list number 3. Please write down first stock TCS. Next to TCS, you just write down January. Next to TCS, January. I'll tell you what it is. Second stock is Balkrishna Industries. Next to that, you just write down February. Okay. Ambuja Cement, March. HCL Tech, April. ITC, May. ITC, May. ICICI Bank, June. ICICI Bank, June. Tata Steel, July. Tata Steel, July. CRISIL, August. CRISIL, August. CDSL, September. CDSL, September. Hindustan Unilever, October. Hindustan Unilever, October. Dabur, November. Dabur, November. Hindustan Zinc, December. Is this clear? See, I've tried to align stocks with the respective month. Each stock will give you dividend once in a year. Yes or no? Do you guys believe in that point? Every stock will pay dividend once in a year. But see what I've identified the month on which a particular stock is trying to pay dividend. Okay, TCS is paying in January, Balkrishna Industries is paying in February. Like that, we have 12 stocks aligned according to the months of a year from January to February. This is the order that you're supposed to follow. So why is this list important? These are the lists which are paying dividends for a specific month. So if I add up all the share values of these 12 stocks, it will roughly come around 16,000. So can you all buy 16,000 rupees worth stock whenever there is a possibility? I want you guys to buy the entire list by buying one share each. Okay. Either if you can do SIP of 16,000 once in a month or once in a quarter, at least once in a quarter. Okay. You guys are supposed to buy the entire list by putting 16,000. Okay. Why this is important? Say for example, let me take TCS. If I go to fundamentals and if I click on events, if I go to January month, do we have 67 rupees and 8 rupees being credited? 75 rupees dividend was paid in January. Say for example, if you add around 1000 shares of TCS, how much money would have got in January? Anybody? They have paid 75 rupees per share dividend. So if you add 1000 shares, 75,000, right? That is the beauty of it. Say for example, if you have, say for example, if you want to do a SIP of 5,000, you can buy one share of TCS and one share of Balkrishna Industries within 5,000. Next month for 5,000, you can buy any of these shares amounting to 5k. So if I add one share, Anjanji, I'm repeating this once again for you. If you buy one share of all these companies, one each of all the companies, if I add, so if I add all this, it will come up to 16,000 rupees. Either you can buy every quarter, within 3 months, you can buy the entire list. Rahul Singhji, buying 1,000 shares will be very costly. Let me allow to explain things. How can you achieve 1,000 shares in 10 years? I'm not saying you need to buy 1,000 shares immediately. By buying at least one share of every company, I'll show you how it will become 1,000 shares. If you allow me to go ahead, that is where the beautiful concept is available. Okay. Say for example, there are, see how many quarters you have in a year. Let us assume you are investing 16,000 every quarter. So how many quarters you have? 4 quarters. So if you, in a particular year, okay, if you buy the list 4 times, don't you think you'll be having 4 shares of each companies by the end of the year? Are you clear? You will be having at least 4 shares of all this company by the end of the year, because you're buying one share every quarter. You'll have four shares. Okay. See, according to my research, according to my analysis, all these companies are paying 1:1 bonus share twice in a decade. Okay. 1:1 bonus share twice in a decade. So from next year onwards, even if you don't invest, if you just allow four shares of each company just like that, if you get 1:1 bonus, what will happen to 4 shares? Everybody, please reply. Correct. 8 shares, right? Because they're adding four more to yours. And if you get one more 1:1 bonus share, once it is 8 after completion of 5 years. So totally it will be 16 shares. Yes or no? Without doing any effort, without adding any money, without adding any extra shares, you're getting 16 shares. You just bought 4 shares in 1 year and you forgot. You didn't even bother to add more. Okay. And you are getting 1:10 share split twice in a year. Say, for example, if you have 16 shares, what happens if you get 1:10 share split? You need to multiply 10 to the quantity. 16 into 10 is 160. If you get 1:10 share split in 5 years, your 16 shares become 160. Yes or no? Now, in the next 5 years, if you get once again 1:10 share split, what is the quantity now? 160 into 10. 1,600. Rahulji, are you there? Now, are you getting an idea? How did you achieve 1,000 shares in 10 years? You just bought 4 shares, that's it. Raviji, you're not supposed to look at the chart. List number 3 is only for investment. Please don't look at the chart. You will buy those shares and you will forget it. You just have to buy four shares of all these companies and you will never sell. for next 10 years. Yes, Prashant Kaushik ji, you just have to buy only for the first year. After that, you are not buying. Is that clear, Prashant ji? Say, for example, if you have enough money to buy four stock of all this company, you can just buy and forget it. List will not change for next 20 to 30 years. Because these are the beautiful companies which are giving you regular dividends, twice 1:1 bonus in a decade and twice 1:10 shares within a decade. Because it took a lot of time for me to craft all this. Mechanically, you are buying all these shares once every quarter. So you are supposed to arrange 16,000 rupees every 3 months. Whether you do intraday make money, that is left to you. But will you arrange 16,000 rupees every quarter to retire rich from 11th year onwards? So don't you think getting 75,000 every month dividend is brilliant? Sri Lakshmi ji, for next 10 years, you will not keep buying. For only first year, you will buy that and you'll forget it. You can buy some other share for long-term investment. If you have money, you can keep buying them. Your dividend will be greater. So every year, every quarter, you can keep buying it. Okay. See, these are the qualitative information you'll not get anywhere. Okay. Nikhil ji, no company here will act like Adani because no company gave 3,000% in a year. So you don't have to worry. Yes, Priyanka ji, your dividends will be taxed close to around 10%. Punita ji, say for example, let us assume the share value of a company is 400 rupees. Okay. Because of huge demand, because of some strong news, people will start buying this stock. They create a lot of demand for a particular stock which is at 400. In 5 years, they push it to 4,000 rupees. Don't you think there is a 10 times growth in the share value from 400 to 4,000? Right? Then what will company board members do at this point? They cannot pay 4,000 rupees back to each and every shareholder. It is 10 times of their net worth. So they divide the share value by 10. They bring it to the normal value of 400, which is book value, and they try to multiply the quantum. So the investor, if he multiplies the number of shares with the 400, he'll be having the same investment like what he had earlier for 4,000 rupees. That is 1:10 share split. Okay. So these are the companies which are part of. See, there are so much of information that I'm trying to give you, which is not available anywhere. I'm trying to secure your life. See, I'm part of a 100 crore club where each and every trader has 100 crore in Zerodha, and they have filed the income tax of 750 crores last year by doing intraday trading. Right? Those guys gave me this list. They are getting 5 lakhs every month as a dividend because they bought shares 10 years ago. They have been investing like crazy. So I thought this list might help you so that you can also get at least 75,000. Say, for example, we have, say, for example, if I go to fundamentals, so we have, can you all please multiply 75 into 1,600 shares? Raviji, that's not possible. So that's my friend circle. 1,20,000. So don't you think getting 1,20,000 is a good income without doing anything? So each stock will be like 1,600 in terms of quantity, and each stock will be paying some different value. Every stock might not pay you 75 rupees. Even if you get 20 rupees or 30 rupees, getting 50,000 rental income is quite easy by owning these shares. You just have to buy 4 shares and forget it for 10 years. Parshuramji, it comes with experience. Is that clear? Can I go ahead? The list 3 is addressed. There's no pending work left out. Rahulji, if you buy only TCS because it is paying high dividend, don't you think you'll get income only in January of every year? Do you want income only in January of every year or every month? So Rahulji, if you drop a question, I would appreciate if you can reply quickly so that I can go ahead. You said, why not buy TCS? Because it is giving dividend for a month. It won't work that way. It won't work that way, sir. If you are following my method, you have to follow the rules of the method. Then you can buy Asian Paints. Asian Paint is giving you highest dividend. Then you can buy only Asian Paints for lifetime, and you need to wait for the specific date for it. What I'm trying to tell you, every month you should get some income, right? That will give you great opportunity. You can reinvest the dividend amount to buy some other shares. Is that clear? So can we discuss bull call spread and bear put spread? Yes. Currency and commodity we'll discuss tomorrow. Is that okay? Currency and commodity we'll discuss tomorrow. Let's discuss bull call spread and bear put spread. Okay. And I would request all of you to keep your questions at the end of the session because it is getting dragged. See, if I was in your position, I'll be listening more because I want to learn more from a person who's much more experienced, right? So I'll forget whatever I've planned to tell you guys with the limited time available because I should have completed my module much earlier. I'm just stretching this module because I've been addressing all the questions. At least at the fag end of the session, you can extract more information from me. That's what I'm trying to tell. Okay. Say for example, so if 16,988, if 16,988 is the spot price, what is the call option in the money will you take? Please tell me. 16,988. Which call option will you trade? Everybody. Call option on a STG, not put option. You're supposed to subtract. Please don't make mistake at this level. 16,900 call option. Okay. Which put option will you trade? Okay. So before going to put option, yeah, 17,100 put option is right. So let's discuss what is the at the money strike price for 16,980. 17,000. 17,000 call option is the at the money. Okay. So which is the out of the money for 17,000? You have to go 100 points. In the money put option will become out of the money call option. Right, 17,100 put option, which was in the money. Don't you think it is out of the money for call option? That strike price. OTM, away from ATM. So let me add 17,100 call option because I'm trying to explain something beautiful. Please concentrate. I've taken one in the money according to a strategy that is 16,900. I've taken ATM also. I've taken out of the money also. Let's try to analyze. Okay, let's try to analyze this. Let's take only out of the money for an example here. So if I take out of the money, what is the probability of profit you have if you trade out of the money? Which you can see 27%, right? Winning rate is just 27%. Even if you take a right entry, there won't be movement because most of the time, 73% failure rate, yes or no? The probability of profit is just 27%. 73% you will lose, right? So let us try to take at the money. Do we have any improvement in probability of profit by shifting out of the money to at the money? 35%. Jaspreet ji, no. Why there is no improvement? There is no improvement from 27% to 35%. Even 1% improvement will improve accuracy like crazy. Don't you think 35% is higher than 27%, Jaspreet ji? Yeah, that's my point. So rather than trading out of the money, even if you trade at the money, don't you think the accuracy is higher? Don't you think the probability of making money is higher? Is what I'm trying to tell you. But usually you trade in the money contract, right? So don't you think this has higher chance of making money compared to out of the money and at the money? Yes, it has got a failure rate of 60%. But anyways, whenever there's an entry according to the setup, then only you're trading. So 60% failure chance has been eliminated. Whenever there is an entry according to the setup, whenever you take trade, you have highest success rate amongst these three. In the money has highest success rate amongst these three. Yes or no? Yes. So now let's try to create bull call spread. Okay. Do you guys have an idea regarding bull call spread? Buy in the money. See, I'll tell you. See, what is bull call spread? It is like taking an insurance for every trade. If you buy a car, don't you think you'll buy an insurance for it? Though you're not making any mistake, somebody else can make mistake and they can hit you, right? So definitely you'll take insurance when you buy a car. So likewise, whenever you buy a trade, you have to buy an insurance for it, right? So what is the in the money contract that we were discussing earlier? Buy in the money, buy in the money call option and sell out of the money call option. Please write down this statement. Just write down bull call spread. Bull call spread. Next point. Buy in the money call option and sell out of the money call option. Both has to be both have to be call option only. Please remember. Buy in the money call option and sell out of the money call option. We'll use the same logic of 100 points gap between from ATM to choose in the money and out of the money. In Bank Nifty, we'll use 300 points gap from ATM to choose in the money and out of the money. So if 16,900 is in the money, what should be the out of the money contract that we are supposed to sell? 17,100, 100 points above ATM. Yes or no? I just need yes from everybody. So let me sell 17,100 call option. What is the capital required to sell one lot of Nifty 50? 1 lakh. But if you create the same thing, you just need 23,000 rupees to create bull call spread. Don't you think this is a decent money to use to do edge form of trading? Whenever market is bullish, if you are very fearful about trading only naked call option, with just call option or put option, you can just do hedging, and this is a safer method of doing it. So you need to buy in the money and sell out of the money, right? I've bought 16,900 call option and I've sold 17,100 call option. Is this clear? Bull call spread. Bull means bullish market. Call means both the contracts have to be call. Spread means a gap of 100 points from ATM. I'm trying to derive definition from the name itself. Bull call spread. Bull means bullish market. Call means both the contracts has to be call. Okay. And spread means 100 points gap. Just try to round off the spot price to ATM. From ATM, calculate in the money by subtracting 100 and adding 100. You will get out of the money. The gap for Bank Nifty is 300 points. Okay, gap for Bank Nifty is 300 points. So let's try to analyze the probability profit for this bull call spread compared to in the money contract. So just by trading in the money contract, it was 40%. By creating bull call spread, it is 51%. Don't you think the probability of profit increased by creating bull call spread here? Yes, yes, Venkatji, this analysis is free in Zerodha. Which one is better, 51% or 40%? So whenever you get an entry, according to the setup, you can create bull call spread also to trade. Whenever market is trending, say for example, if the topmost resistance of Fibonacci range is broken, it will be trending, right? At that time, you might panic. So now you have both the methods. You can do scalping and capture 30 points, or you can trail stop loss, or you can create bull call spread and you can trade. Kishorji, it is the setup. RSI, MACD, 10 SMA and parabolic SAR. Okay. See, from this point, it was bullish, Kishorji, yes or no, according to the setup. From this point onwards, it became bullish, yes or no? So rather than just scalping, if you want to stay back in trade, I'm giving you another option, which is very safe. Though it is not part of my syllabus, I'm trying to stretch my module to give you something extra information as a value addition. Okay. As a newbie, you might be fearful to trade. Just call option. At that time, you can create bull call spread and hold. Like see 1, 2, 3, 4, 5. For 1 hour, 15 minutes, you could have held your position and you would have made very good profits. Say for example, whenever you have this kind of a moment, 184 points. Okay, you can just keep NRML mode, so that you can hold it till expire. See, I've kept it NRML. You can make MIS or NRML. I would suggest you to go for NRML for the 23,000. If you have a facility to hold till expiry, you can hold it, right? Yes or no? So please create it in NRML mode. Is this clear? So likewise, let's create a bear put spread. For bear put spread, please write down buy in the money put option and sell out of the money put option. Buy in the money put option, sell out of the money put option. Anjanji, I'll tell you, can we focus on the definition, please? Buy in the money put and sell out of the money put. For 16,988, what is ATM? 17,000 is ATM. What is in the money put option? 17,100 is in the money put option, yes or no? So I need to buy in the money put. So you should always buy the contract. So you need to buy in the money and sell out of the money. Is this clear? The probability of profit is very good. So whenever you're fearful of just trading put option like this, when market is falling heavily, okay, so don't you think you can create bear put spread and stay back and trade for long? Here also, and here also, and here also. Yes. Say for example, what is the capital deployed here? 22,000. What is 10% of the capital? Quickly, what is 10% of this capital? So 2,200 will be your target and 2,200 will be stop loss. Whenever you see 2,200 profit, cancel both the contracts, exit both the contracts. And whenever you see 2,200 as your loss, you'll cancel both the contracts. Are you clear with the target and stop loss? Just calculate 10% of the capital deployed. Whenever you see that 10%, book your profits, exit both the contracts. Whenever you see 10% of the capital, you can book your loss. Very simple. 1:1 risk reward ratio. Is this clear? So tomorrow I'll teach you bull call spread and bear put spread for Bank Nifty. Then we'll discuss currency and commodity segment tomorrow. Okay. And day after tomorrow, we'll try to revise everything very quickly in half an hour. And the remaining half an hour, we'll have a question and answer session. Is that clear? No adjustments, Swastik ji. Don't complicate things. When things are very simple, why will you complicate? Don't complicate. Vanashri ji, please refer setup. Whenever there is a bearish sentiment, create bear put spread. Whenever there is a bullish sentiment, create bull call spread according to the setup in 15 minutes time frame. Okay. Thank you so much. We'll meet tomorrow. And please don't ask any questions in midway. So we can keep Q&A day after tomorrow. Can I expect you guys to write reviews on my module day after tomorrow once we end up our module? Okay. Thank you so much. Thank you so much. We'll catch up tomorrow, same time. Good night. Thank you. Take care. Thank you, Jitendra ji. Thank you so much.